In today's clip, I want to address a very common misconception about what the purpose of investing actually is and why we should never ever fear it, simply due to perceived risk. Hey, Zempak here. Another day, another way of illuminating the world one question at a time. So I've been on the FIRE group on Facebook for some time, and occasionally I see a rather succinct question that is too long for me to type out a response for, so I will address it here. Okay. The question is phrased thusly. I'm paraphrasing slightly. Okay. How did you get over the fear of investing and losing money? If invested in broad ETFs, so we are not gambling or overly risky, but it's hard to pivot from saving to investing when I know we could lose money. To me, this is a question almost everyone who's interested in FIRE or self-started to invest in the market has faced at one point or another, right? Some people intuitively gets over this very quickly, or like this couple, if you're more conservative, this question might weigh a bit more, right? Now, the context for this question assumes investing means investing in the long term and diversified, not investing in individual picks or Bitcoin, something like that, right? Because that'd be a totally separate type of comparison in terms of risk analysis. So here's my response in three different parts, right? One, there's literally nothing in life that's actually completely risk-free, conceptually speaking. Okay, think about every single choice that we make as human beings. If you step outside of your home to go to work, to pay the bills, I don't know, there's a chance that you could get run over by a car on the road. Now, you could say, hey, I want to stay home in the safety of our house all day, but there's still a chance of being crushed by a piece of space debris or something. So living by itself carries risks. Now, most of us take this very basic concept for granted when it comes to simply living because the chances are minuscule that something truly random and awful will happen, right? But conceptually, if we know that at any moment that we could go, aka lose one's life, why then concentrate on the minor fluctuation of the market, aka possibly losing value in terms of our assets? Sure, if you put $1,000 in the market, it could drop to 900 the very next day, right? But remember, that is actually just a symbolic loss, a loss on paper. It's not an actual loss unless you sell the day when your positions are worth 900. You know how to avoid that? Just be a buy and hold forever investor like me. Problem solved, okay? If you never sell, or more realistically, only sell when you need money, any such paper loss over the course of a presumably long investment career will be completely irrelevant, right? Plus, you get to remove the emotional buying and selling that most people are prone to entirely out of the equation. The reality is that with anything, with any type of returns, right, both in life and in terms of money, they all carry a corresponding level of risk. But over time, investment risks usually evens out towards the positive, at least on the money side. Okay, I can't say that about the life choices side. Okay, part number two. Because the couple who asked the question concentrated and emphasized losing money, so let's address that. Technically, simply saving already means that you're losing money anyway. Okay, so to phrase it like, oh, saving is not losing money, but investing is possibly losing money is actually slightly false, unintentionally, I assume, right? Right now, the Fed rate is very low, so the interest rate at consumer-facing banks for savings rate are also even lower, right? But the truth is that no matter what the savings rate at a regular bank would be, it will always be pegged at slightly lower than the assumed inflation rate. So technically, when you're saving money, you are actually always losing value on your money, right? It might not feel that way because your, say, $1,000 in the bank will always be at least $1,000, but its purchasing powers are literally designed to lose value. This is intentional because the system that backs up our fiat currency, which is the US government, really would rather, actually both consumers and businesses, to spend rather than to save all their money, right? Spending makes the economy go around, and our own Fed Reserve specifically has an inflation value they aim for. Note that they aim for a positive inflation value, okay, not a neutral one. So without getting into the weeds of macroeconomics, a slight to mild inflation at the governmental level is actually considered a good thing, which means, you guessed it, you are losing at least slight value on your money if all you do is put it in a savings account. You're losing even more if you keep your money in your mattress, okay? So in this sense, if your goal is to not lose money, okay, saving by itself is actually a worse choice than investing, right? Only by investing can you hope to at least stay neutral, if not positive, over time. And part number 3, okay, finally, let's try to understand what in essence investing in the market really is. Okay, because if you don't know what it is, why would you partake in it, right? So here we're generally speaking about investing in the stock market, okay? Easily done these days with broad ETFs or index funds. And I'm equating that to investing it in a relatively large representation of the US-led consumer market, okay? I'm singling out the US only because most of the research that backs up the FIRE movement are based on US data. So the question really is that you should be asking yourself at any given moment, could be right now, could be next year, or it could be in a decade. The question really is, do you think the US economy generally is going to be worth more or less money? And if we use the past as any kind of example, let's just use like US GDP for an example, right? You can look that up on Google really easily. It's always grown despite all obstacles and recessions and wars over the decades and decades that may make up a person's lifetime, okay? Now the issue is if you look at a short enough time frame, such as within months or weeks, and days certainly, and occasionally, within the span of a year or two, right? The average market can and do fluctuate, but that's completely irrelevant because the overall trend for a thriving economy is always going up. Now, again, because I'm a cynic, is it possible the US won't thrive anymore from now on? Sure, absolutely. No empire is forever, right? If you look at history as an example. So then the follow-up question is, do you think the US hegemony over the world will end in your lifetime? I'm pretty sure it'll be fine in mine. So as long as you have some semblance of faith in the society that you live in, this is a no context question, right? Just do it. But with good investing principles, right? Such as only investing with money that you've earmarked for the long term, and properly diversifying, yada, yada, yada. I can't emphasize that kind of stuff enough, right? So in conclusion, I never fear for my investments because I believe in the economy that I grew up in. I know it's the only way to be in the game of making real inflation-adjusted money, and I'm well aware that everything worth having in life requires taking on some type of risk. Hope this helped. In the meantime, check out some of my other clips in the corners. Cheers.